Okay, so this is exercise 317 on page 349. And we are going to work through this, and we're doing part A. We're going to look at some slides, and we're going to do part B. So part A, it says, exercise 317, it says, I'm on the wrong page. Selected transactions from the Journal of Bailey Incorporated during its first month of operations are presented here, and it's on the screen here. If you can see this on the left-hand side, you can see where it shows that, or you can see it in the book on the page. It shows the journal entries, and then it says instructions. A, post the transactions to T account. So that's what we're going to do first. So the very first thing I do is I go through and I label each one of the T accounts. So the first account listed is cash, so I'm going to list cash on the first T account. The second T account listed is common stock, and I'm going to do common stock. The next one is cash. Okay, we already have a T account for cash. We only need one T account for each account. The next is service revenue, so we're going to create one for service revenue. The next one is equipment. So we're going to create an account for equipment. Then, oops, I spelled that wrong. The next one is cash. We already have the T account for cash, so we don't need to do that. The next one is notes payable. So we're going to do one for notes payable. The next one is accounts receivable. So we're going to do one for accounts receivable. The next one is service revenue. Well, we already have one for service revenue. The next one is cash. We already have one for cash. The next one is accounts receivable. We already have one for accounts receivable. Okay, so we're going to go through one by one, and we're going to post them to the T accounts. All right, so August 1, we've got a debit to cash of $8,000. So August 1, we're going to debit cash $8,000. Okay, that's the first part of that. Second part, we're going to credit common stock, $8,000. We're going to go down the common stock T account. We're going to go to the credit side. We're going to credit common stock, $8,000 on August 1. All right, so that first one's done. Next one, August 10th. We're going to debit cash, $1,700. So August 10th, we're going to debit cash, $1,700. We are then going to go to, let's see, we are going to go to service revenue. We're going to credit service revenue, $1,700. So we go to the credit side on service revenue, August 10th, we credit it $1,700. Okay, go to the next one. August 12th, we're going to debit equipment, $6,200. So August 12th, we're debiting equipment, $6,200. Okay. This is one that has two credits. So we're going to credit cash and we're going to credit notes payable. So this would be where we bought a piece of equipment for $6,200. We put $1,200 cash down, and then we got a note to pay, a loan to pay off the other $5,000. Okay. So we're going to credit cash $1,200. So this is going to be August 12th. We're crediting cash $1,200. And then we're going to credit notes payable $5,000. So we're going to go August 12th, and we're crediting notes payable $5,000. We're going to pay that back another day. Okay. All right, so that one's done. Now we get on the next one. We're going to debit accounts receivable, $3,400. So we go on the debit side, August 25th. We're going to debit it $3,400. And then if we look over here, we're going to credit service revenue, $3,400. So we come over to service revenue, go to the credit side. We're crediting it $3,400. So that one's done. We're going to go to the last one. August 31st, we're going to debit cash, $600. So August 31, we're debiting cash, $600. And then August 31, we're going to credit accounts receivable $600. So we go to accounts receivable, we go to the credit side, $600. Okay. All right, so now we're going to balance the accounts. So I always balance the accounts that have the least amount of numbers first in order to make it simpler, okay? So we've got accounts payable. It's normally a credit balance account. It does have the number on the credit side, so that is correct. We're going to put balance, and the balance is $5,000. Let's go down here to equipment right below. It says equipment has $6,200 on the debit side. Equipment is an asset. Assets have a debit balance, so the normal side is $6,200, so that's correct. Common stock has a credit balance, is a credit balance account, and so we see it has $8,000 on the credit side, so we're going to balance that one. Okay, then over here on service revenue, we see that service revenue, we've got a credit of $1,700 and a credit of $3,400. And it is a credit balance account. We're going to add those two up. So the balance is $5,100. And then if we come over here to accounts receivable, we see that the debit side has $3,400. The credit side has $600. So the balance is going to be on the bigger side, which is the debit side. And accounts receivable is an asset. Assets do have a debit balance. So it is going to be on the correct side. So what we're going to do is we're going to subtract $600 from $3,400. So $3,400 minus $600 gives us $2,800. So the balance is going to be $2,800. Going to come over here on the cash side. So on the cash account, we've got $8,000 plus $1,700 plus $600. So on the debit side, we have $10,300. And then on the credit side, we have $1,200. So the debit side is the larger side. And it is cash. And so the balance is going to be on the debit side because this is the larger side. Cash is an asset. It does have a debit balance. So that is the correct side. So we're going to add $8,000 plus $1,700 plus $600. That gives us $10,300. And then we're going to subtract the credit side of $1,200. So that's going to give us a balance of $9,100 on the debit side for the cash account. So that's posting to the T accounts. The second part we'll do with this problem after this is going to be doing the trial balance using those T account numbers.